Right. Morning everyone. I'm Aiman here. Welcome back to Morning Kappa. Okay, so looking at the S&P 500, well, it fell yesterday over 1.2% on Wednesday session as the tech sector faced a renewed challenge. So I think Nvidia, even Oracle, and also the Broadcom uh, down, right, on AI spending concern. So I think sentiment was further dampened by the November job reports as well recently, right, showing unemployment is rising, fueling fears that the economy is cooling too fast despite the Fed's recent rate cuts. So I think for now, watch for the um, potential rebound in tech today or even tomorrow, as I think Micron tech release its guidance after hours, which also could calm the AI bubble nerve, right? So I think, however, the broader market remains cautious ahead of FedEx earnings report today. Now, if you see here, the S&P 500, I think, took a breather to close below 6,800 points level. Right. So, looking at our US trading stocks that we published yesterday, we got here Boeing stock code PA. Um, so the stock has breached above the $205 dollar level. Now we can expect the stock to travel towards the $220 level on a strong momentum, followed by the next rises at 235 level. Now, if the counter to reverse, do watch out for $195 level for the immediate support, as could indicate for the trend reversal signal. Also, next we have United Airlines, UAL. Well, looking at the charts now, the counter charted I would say higher high market structure sitting above the 21-day moving average, eyeing to reach higher towards the $118 level. If the stock climb higher, we could see that it might travel towards the $125 level. So now if the stock slight below the 104 level, this might signals a shift in bearish structure, right? So, okay, if you look at the China A50 futures, well, it rebounded yesterday on Wednesday session, driven by the surge in tech yesterday and also AI stocks after the chipmaker um, Meta X skyrocketed, I think, over 700% in its debut, reigniting the risk appetite for the local tech players. Right, so I think sentiment was further supported by the POC steady liquidity injection. So expect the index to test 5,500 points resistance level as AI fever draws in retail capital yesterday, but upside may be kept until the LPR decision on the 20th this month give a clearer signal on monetary easing. So we um we expect, we expect that this new China AI sentiment could sustain and push the market towards the immediate resistance. And if the immediate resistance of 15,500 breach, do watch out for the 16,000. Um, 16,000 level. So for the WTI crude oil futures, well, it rebounded higher as well yesterday after Trump ordered a total blockade of the sanctioned oil tankers linked to Venezuela, injecting fresh supply disruption fears into the market that has been pricing a surplus. So the rally was further supported by the EIA, the energy report, showing that lesser barrel draw in the crude stock. Although gains were uh, kept by worrying barrel build in gasoline inventories, I think this might signals that fuel demand remains weak, right? So despite the current or the recent geopolitical risks going on, we'll still keep our negative trading bias unchanged, eyeing for the $55 level, uh, together followed by um, 53 support level. All right, so coming back to our market. So, okay, if you look here, this is FBM KLCI. Well, yesterday it resorted to a profit taking, sliding at or close at 1641 .44 points as the window dressing, supported by the banks and also financial sector, right? Also, if you look closely here on the KLCI member, which is IHH, uh, well, it pulled back, dragging down the index lower. However, the broader market wasn't all bearish yesterday. Um, the tech stock bucked the trend. If you can see here, Vitrox, Franken, Inery, and UWC as well, tracking a massive AI chip debut in China, which sparked renewed interest in the uh, I would say semicon chain, but I think this will offset slightly the uh, on the AI bubble fear sentiment happening in the US right now. So expect the index to consolidate somewhere around 1630 to 1650 level. And if you see, I mean, if you are trading on the FKLI, we still view it um, as a positive pullback yesterday, and expect that the index to breach the resistance of 1560 level, right? Right. So this is the seasonality chart or seasonality heat map in terms of month that we've been always showing to you guys, right? Also for the Malaysia market, I think for this month, well, at least for the first half of December, is well within our expectation, backing gains to close at 2.5 to 47% return and to be in the green territory. All right, so this is our watch list. Some of the names that we highlighted are technically positive. And in terms of our trading stocks, Malaysia trading stocks, so today we have Vitrox. If you can see here, the stock has a breakout above 4 ringgit and 25 cent on a strong volume. Right, so with that, we expect that the momentum to remain bullish, and the stock able to climb further to test the next resistance at 4 ringgit and 50 cent, followed by 4 ringgit and 70 cent. So if the stock to clear below the 4 ringgit and 5 cent level, this could shift to a bearish structure. Also, next we have EcoShop marketing, which is EcoShop. So the stock is experiencing a breakout as well above 1 ringgit and 35 cents. So if the stock to remain bullish, you are expecting that the price to reach at 1 ringgit and 45 cent in the coming session. So second resistance now is at 1 ringgit and 55 cent level. Keep an eye at 1 ringgit and 25 cent level for any attempt of reversal. And so today we have two breakout stocks, and I will explain later in detail. All right, so this one. All right, so maybe if we were to look deeper on our trading stocks, right, for today, which is Vitrox. So I would say that the stock has now formed a higher high um, after it reached above this consolidation zone, right? Or the sideways zone. And I think most importantly that the level that we're waiting for, which is the um, retracement level, which is somewhere around here. And together with that, if you can see here, MACD also crossed above the signal line, indicating that the potential or the pullback deemed to end here, right? Also, next, similarly, we got Eco Shop as well. So, right, maybe this one is one of the stock that you guys are waiting for it to rebound and have kept it in your watch list for a while now. So I think now the chart is showing a positive signal. And if you remember, I shared recently that we are waiting somewhere around 135 cent level to break, as to which it will form a new higher high. So, I mean, from yesterday's move, the stock has crossed above this 21-day moving average, indicating a new bullish new bullish new term view, right? I mean, yeah. So, again, MACD also have crossed above its signal line in the negative zone, signaling a bullish movement. All right, and lastly, if you look at the if any one of you trading FCPO, yeah, well, FCPO rebounded slightly yesterday to close at 3965 as I think monsoon fears kicked in, and reports of flooding in some of the state in Malaysia, disrupting harvesting season, right? Provided which provide a floor to the prices. However, yeah, as I mentioned recently, gains were capped by the bearish data from the cargo surveyors, which reported the export uh, plunge, confirming that the foreign buyers are uh, not, I wouldn't say it's exit, but more like stepping back. So we keep our negative trading bias for now, and that's a key catalyst that push the market upwards are in. So for now, we are looking at 3,900 support level together with our new support level at 3,830. Right, so I'll stop here and pass the floor to Faiz for his company update. Thanks everyone and happy trading.
Hi, good morning, everyone. Today we have a bank sector update and a Scientex result review. So I'll be beginning my presentation by starting with the bank sector update. So maintain overweight call on the Malaysian banks. Top picks are CIMB, Hong Leong Bank, Public Bank. Despite NIM pressure from the July OPR cut, third quarter sector PATMI rose 4% quarter-on-quarter, supported by stronger non-interest income and significantly lower ECL. The positive outlook into 2026 is driven by attractive dividend, expected NIM recovery in the first half 26, and capital management potentials. So we move on the earnings wrap. 6 out of 9 banks met expectations. Affin and Bank beat the ECL right back, while MBSB missed due to steeper NIM compressions. While Bank Islam and BSB underperform consensus, dividend highlights include MBank higher interim DPS and CIMB 7 cent special DPS. Initiating its 2 billion capital return plan. In terms of management outlooks, banks remain cautiously optimistic on loans growth and fees. Through some deal drawdowns may slip into 2026, NIM outlook is mixed near term. Most FY25 guidance is unchanged. Affin cut ROE target, Public Bank slightly lowered ROE expectation, while Maybank turns more positive on NIM credit costs. For the forecast, FY26-27 PATMI trim marginally 0.5% per annum, but FY26 earning growth is expected to accelerate to 5% year on year. It's driven by a stronger operating income. And then that's all for the bank sector update. We move on Scientex result review. Scientex reported first quarter FY26 core profits of 141 million, down 2% quarter-on-quarter, but up 9% year-on-year. This met expectations, accounting for about 24 to 25%. Full remains below 0.5 times. The packaging segment saw a revenue rise 3% quarter-on-quarter, while EBIT increased 10% due to better product mix and cost efficiencies. This lifting margins to 7.4%. Property posted higher year-on-year sales and EBIT through a quarterly number where softer due launch timing. Meanwhile, the group launched its 708-acre Scientex Jawi Town Shop and unveiled 1,094-acre Scientex Muar in first quarter FY26. With the occupancy rate, Scientex is aiming to launch Scientex Pulai 4 in second quarter FY26. With planning underway the newly acquired land in Malacca, Kedah, and Selangor. Earnings unchanged, but we up our TP slightly to RM3.60 post housekeeping adjustment for FY25 annual report numbers. That's all from me for the bank sector update and Scientex result review. And thank you everyone for your time. See you again at the same time, same place tomorrow. Happy trading. Thank you everyone.